Hello traders, welcome back to Your Nifty Guy. I hope all of you are doing well. Today was Nifty's weekly expiry, and what a day it turned out to be. The index picked a clear direction early on and kept moving steadily, showing strong momentum throughout the session. In this video, we'll take a closer look at how the trend developed, the key zones that acted as support and resistance, and what this price action could mean for tomorrow's setup. Whether you traded today or just observed the market, there are some important takeaways you should not miss. So stay tuned till the end. Hit that like button if you enjoy these kind of analysis and make sure you subscribe to the channel for daily Nifty insights and setups. And on that note, we'll jump straight to the charts. Uh, Yesterday, what we had planned was that we'll be taking this will be a no trading zone for us, and a long trade can be planned above this with a pullback. A short trade can be planned below this with a pullback. Now, number one thing that the price action taught us today was the importance of pullback once again. We opened with a gap up above the zone above which we're looking for a entry. We got the pullback, which is not a pullback, but kind of reversal. But try to understand this is where we get saved by taking uh, wrong entries or being on the wrong side of the market. Now, this is something which I am more excited about, is the live example of the trap setup that I always keep talking about, the rare setup. So, anybody who is a regular viewer on this particular channel would be noticing a lot of times I mention and I draw some candles around days high or days low, and I tell you that in case if we get a closing above this particular candle and we get the low of that particular candle gets taken out, we can trade on the opposite side. Right now, yesterday I did not mention about that particular setup. The only reason was that the probability of the setup happening and working out the best happens when the prior day is trending, right? But around here, the last day, which was yesterday, was not at all trending, right? It was completely sideways. Nonetheless, because this has happened in the market, this is what I would just like to show you momentarily. So, what we needed was we got a candle closing above yesterday's high. We also got a follow through. So what this actually means is there were fresh buyers who entered at the break of yesterday's high. And if there are fresh people who have created fresh positions, where would their stop losses be? The stop losses would be below this particular candle's low. And as soon as this low gets taken out, you get to trade a beautiful scalping trade on the downside. So this is what I always keep on talking about. And I was actually stuck in the traffic today. There is heavy rush here in Kolkata because of the Diwali season, and I was stuck in the traffic. And I got a message from one of the followers, Siddesh, and I am I got so happy that somebody from my YouTube community who has been watching my videos has been able to spot this particular trade, right? I opened the charts as soon as I saw his message, and then I saw this particular thing. Yes, and I told him I am. He did not take this particular trade, but then I told him that I'm very happy that at least you spotted the trade, right? So the whole purpose of me starting this channel was this, that I want to show you how I look at Nifty. What are the things that I actually look at, right? And if this is exactly the reason why I keep on mentioning and repeating the same things again and again. And I think somewhere or the other it has kind of paid off. So thank you, Siddesh, for observing the setup and also messaging me about it. I am a bit tied up on my family businesses front because of the Diwali rush and pressure. And that is why I'm not too actively trading, and I got tied up in the office as well. So that is the reason I did not take any trades today. But then market gave a good clear trending move on the downside. Only around here formed a double bottom. And if you see, I'll quickly show you one thing. There was only one trade that could have been the most high probable trade. So around here, the structure had changed, but keeping in mind that we are nowhere close to any support. Had we been at a important support, we could have still traded this particular setup with a clear breakout of the W. But then again, we were not at a very good support, right? And so this is where the structure changed. So instead of immediately jumping into the long trade, what we could have done was waited for a pullback now, which again came in the form of a sideways consolidation around here, right? So this was a sideways consolidation, and a good scalping trade would have been could have been taken above this particular high. And I am sure when this was taken out, there would have been a lot of change in the OI as well, around the 25,150 strike prices, right? A lot of people who would have shorted the markets around here by shorting those calls would have exited, leading to this particular move on the upside. So in total, there were two trades that could have been done today. One was this trade as per the trap setup that we have, which is only and only happening at the start of the day, right? So I hope the setup is quite clear. What we need is a momentum on the upside for day high breakout kind of, and then trapping the buyers, or maybe low going down below the previous day's low, inviting fresh new sellers, and then triggering their stop losses. So this is what we need to look at. So I'm very, very happy with today's price action that I actually got to show you a live example from something that happened in the markets, and a pretty simple expiry to trade. But then again, the setup that we had, or the plan that we had to short Nifty below this low, could not have been traded. It was not tradable because Nifty, again, if anybody would have done with the valid pullback, this was the entry candle, you would still have made money. Uh, but then again, had I been looking at the markets and trading, I would not have taken this particular trade because the markets had already moved close to 200 points from the day's high. And like I always say, keep in mind where the market is coming from before jumping into the trades, right? Had we opened around here, had we opened somewhere with a gap down and then would have broken down, this would have been an excellent trading opportunity. But that was not the case around here. The market had already from the day's high moved around 200 points, and that is why even if I would have been active in the markets, I would not have taken this particular trade. So I hope the post-market analysis, even though I was not too active in the market, is clear and helpful. Now we'll quickly jump on to tomorrow's trade plan. So on a daily time frame, we have, of course, formed a bearish candle. We are also approaching a good trend line, which will be acting as a resistance until unless it is taken out. The first time we came here, we gave a good move on the downside. The second time again, 8, 9 days of straight fall. So it will not be a easy resistance to break. But again, we will not be predicting anything. We'll delete these. We don't need them for tomorrow. So right now, honestly, even though as per the candlestick rules, the trend has not reversed, right? We need for on a daily time frame for the trend to be reversed, we need three conditions, which is the uh, candle to the high to be lower than previous high, the low to be lower than previous low, and we need a closing below previous low. Although we have got two conditions, but then the high had been taken out early in the day, and that is why not all three conditions. So again, we are still maybe in a sideways territory. We might still move around sideways still in this particular big range, and then get the actual move. But then this is where things get interesting on a 4 hour time frame. Now, I don't know how many of you remember this. We had drawn a beautiful 4 hour support on the 4 hour time frame based on this particular swing, right? So this was the last swing, and this particular move which came in breaking above this particular high, this was the clear swing. And this is where markets actually took the support first time. But then if you look at the market structure now, up move, downward retracement, markets moving up, moving down, moving up, moving down. Does it not look like a double top, like a structure around here? It has given us a clear breakdown. It has given us a good inside bar. So this makes this particular low as extremely important for us. If we are going down below this low, we can get a good trade on the downside. Also, we are very, very close to this particular swing low, which is there, 25,014 plus 25,000 as a round number. If broken, we will be getting some good trades. So this is where we look at. shorting the markets around 25,000, we will be a bit careful. Once 25,000 breaks, if we are already in a short position, we will be adding more quantities to it, right? On a 4-hour time frame, like just I showed you, the structure looks weak. It has formed a good double top with a good inside bar at the end of the day, right? For creating any long entry, what we'll do is we'll simply take today's high and today's low. We'll quickly mark the point 0.5 to the markets also took after this particular fall when the markets went up, moved up, changed the structure. It took its resistance exactly from the point 0.5 to 0.618 zone of this particular down move which had come in, right? So like I always tell you guys, fib levels work very, very well with Nifty. This has been my personal experience, and that is the reason I incorporate it a lot. Say, for example, we open flat. This is also a very good trade that can happen, right? We open flat around here, we go up, we come down, right? In this particular scenario, again, this is a resistance level. We are already in a downward market structure based on the 4-hour time frame. Below this low, we want the markets to actually go up. This is a short trade that we can take, right? Imagine markets open flat, slightly gap up. We go up, we go down. At the break of this particular swing, we can take a trade on the short side. We get an earlier entry, right? Since we already know we are at a resistance, and any long trades to be initiated strictly above this. And again, we'll be careful once we are approaching the trend line. But then right now, I believe tomorrow's price action can be a little bit on the negative side. But then again, we'll not be predicting anything. We will be taking each day, each candle at a time, and do not predict anything, but be prepared for anything and everything. So, yes. All right, guys, that's it for today's video. The weekly expiry gave us a clear trend and some solid clues about what might unfold next. Remember, every day teaches you something, even on the days you don't trade. If you found this breakdown helpful, don't forget to like the video, drop your thoughts in the comment, and share it with fellow traders who'd benefit from it. I'll see you in tomorrow's video, and as always, stay disciplined, stay patient, and trade smart. Thanks for tuning in. Cheers.